In the next 3 minutes, I'll tell you exactly what the three people in the thumbnail has to do with one another. And for those who'll stay all the way through, you'll learn about the 50% discount. Now, let's get into this. Yesterday on Tom Nash's community meeting, we spoke about UnitedHealthcare because Warren Buffett started accumulating a position over Q2, which now sits roughly at the average price of 380. As far as we know, $380 is average price because he was buying all the way from 599 all the way to 274-ish as far as we can tell so far, giving us an average of $380 throughout his positions as far as we can tell so far. So let me show you what it is that I noticed while I was looking and analyzing this from a technical standpoint. Well, think about it first of all. The big beautiful bill, which we know is already in place, will mainly take away from governmental subsidies for healthcare, which means people will have to subsidize these themselves, and the healthcare is important, it's not going to go anywhere. Over the upcoming years, people will spend more and more on healthcare simply because they have no other choice, giving potential these insurance companies giving more and more money be simply because people have no other choice. It is almost an inevitability kind of scenario. And so, if we're looking at what the market is already prepping up for from the technical analysis standpoint, it is pretty simple and pretty interesting. Technically speaking, right now on the weekly time frame, we are bullish, and we still may end up testing that 340 level, potentially even that median of the longer duration channel, which we have been moving within for quite a while, giving us this almost perfect junction of various forces. Arguably, so we're not going to go back in time, right? But we may slip and slide and find ourselves probably retesting that 393 and 416 level, which is kind of a junction. Of course, we're not going to retest that. That will be out of bounds for that channel. Still may be slippage or this almost volatile price action based upon the momentum that is being generated by the sentiment, by the news, by the talking heads, by the media, by the idea that Warren Buffett is buying into healthcare, and so people, guess what, want to buy in with. Some, of course, will be able to capitalize on short-term trades, but what I'm here to talk about and how Tom Nash has everything and anything to do with this, really, if you guys don't know, Tom Nash preaches the idea of long-term holding and not really trading, but more so investing into things and basically playing things throughout the long game and not just buying to sell next year when the price bumps up $20, right? So, and that really coordinates very neatly with Warren Buffett's approach and attitude to the market. Warren is not exactly a trader, and what we can assume right now, his several $billion position right now is nothing. It's just a beginning of a larger position into which he'll probably going to be DCing, whether it's going to be him or Greg. We don't know. It doesn't really matter. At the end of the day, this is, as far as we can tell, is the plan, and it completely makes sense. But if we're going to look at the technical analysis, the way it coordinates very neatly, sure, we saw some bullish momentum there, but realistically speaking, all it is a temporary bump within the overall bearish cycle, if you will, which plays very neatly into the overall cycle of the market and where we are in general right now, and potentially are headed. And those who are familiar with my community and the analysis that I bring about the indices and the overall sort of cycle, it appears to be that we're going to be moving even lower. So how does that play into things? Well, pretty neatly on the quarterly already we can hear or rather see that we are significantly bearish still, in bearish territory, in oversold territory, if you will, bearish dominant. So we're basically getting here a double whammy. So it's not all that surprising. This is merely a representation of this momentum that we had so far. But how about what we can see for the larger cycle of things? Again, the larger the time frame, the longer the duration of the process. Us being in bearish territory and bearish dominant in the 6-month scale signifies that this is not over yet and potentially going to last somewhat a lot longer. Just again, I'm not here to give an exact time frame because we're not here to time the market, but rather to identify the levels to which we can drop. And here's the really scary bit. The yearly chart shows this very clear, strong divergence. These two forces, as we say all the time, represent bullish and bearish momentum. Right now, we're full on bearish with very clear and big margin divergence on the two forces. And the smaller the divergence, or rather the closer these lines basically move in parallel, the easier it is for them to cross over and signify and change in direction. This sort of structure signifies almost a two-pronged process just for the forces to converge and then overlap. This is extremely bearish. And given the long duration of the time frame, arguably we're far from over. So 315 still may test all the way to 395, 415, given these very strong technical levels, and they actually match with various support and resistance levels that stem from channel structures, diagonal structures, if you will. You also have the 322, which kind of in essence the force and the force that is being tested right now, the juncture and the junction of these two forces. Also, 250, very strong area, still may be retested. Let's not forget, of course, about our various psychological levels, such as 300 that resides very near the area that is currently being tested. Of course, we have 250 that is just adjacent to the 249. And we have these levels as well that I was able to deduct various other technical tools, far more advanced tools that I actually talk about in my community. I'll talk about that in a minute. So I was able to deduct these levels at 218, 214. Very, very strong levels, which, as you can see, already potentially played a role in establishing where we go. Of course, you do see some distance, but of course, the market is not always, on the dot accurate. But this still may be the force that represented the channel, because usually they function as a channel, to prevent the price action, rather slow it down, stop it, turn around, and then come back to it later down the line. We also have 159, which is again a fib level, very strong and important level. And of course, we have the 109 and 104, which arguably can call that $100. You're like, Greg, that is insanely low. That is a third of the price. That is that is bonkers. That is impossible. The market cannot drop that low, right? The market will not drop around 70%, right? Or at least the market does not necessarily have to drop 70% or even nowhere near that for assets to have far worse sentiment to deteriorate over time, which is going to be perfect for such people as Tom and Warren to DCA into this over time, accumulate a larger position into the next rally, which will then yield all the results, but may take a long time, potentially a decade and more so, right? And I would not think for a second that Warren Buffett would be buying for anything shorter than that. So the whole idea here, how these three people work in line basically, is that Trump is the causality, and Warren and Tom just have the right approach to ride the wave that is artificially generated and over time will generate more and more momentum to itself out of necessity, right? And technical analysis so far seems to be working in line with that. I mean, meaning we have more of a drop that will allow DCAing, and it will be painful, it will not be pleasant because you keep on buying and you see your again. So no one says you have to be DCAing all the way through. You can wait for the bottom, but how do you know where the bottom is? Do you know technical analysis? Well, again, uh, sort of bringing me to my next point. Those who want to know technical analysis properly, join the community. Here are some testimonials from my one-on-one academy lessons where I teach technical analysis one-on-one, literally like a math tutor for your kids, but technical analysis for the market. And here you can see results actually. One of my members here, Leo, over a period of 31 days generated $190,000, right, using these methods and systems. But this is just, of course, a unique example. Not everyone operates like this. Some people are long duration. Some people are have more of an investment mentality and approach to things. We have various channels. Our, of course, from the main chat that we discuss anything and everything from and to. Of course, everything has more of a technical analysis approach and additive to it. Market talk, something more oriented. We even have an options channel, of course. I even show my positions here, charting 101, various little tools and tidbits that I make for the community. Member exclusive meetings that I make for the community only if it's ad-free content and so forth and so forth. The way to sign up is pretty simple. You go to patreon.com/investory, right? You switch to membership. Well, it's let me show you. You go right here, and then you'll have the ability to switch the sticker on for the next 12 days only. After 12 days, it's going to be completely off, and you'll not have this discount. $48 instead of $48, rather $24. And if you switch this, as you can see, it's meant to be $30, but if you pay annually right away, it ends up being $24. This grants you with 2 meetings a week and far more activities, really, if it's again seeing the positions, the various channels, direct access to the private Discord, and far more, really. If I'll just end up talking about the community and everything the community members get, so I'll end up talking about this for a day and a half. That is it, all boys and girls. I'll see you on the next one. Hope to see you in the community. Have a wonderful trading weekend day. Bye bye.